Hey everybody, welcome into the Thinking Crypto podcast. I'm your host, Tony Edward. On your way in, please hit that subscribe button as well as the thumbs up button and leave a comment below. If you're listening on a podcast platform such as Spotify or Apple, please leave a 5-star rating and review. Folks, let's take a look at the prices because the crypto market is seeing a bit of a pullback. And this should, of course, come as no surprise because literally we've been talking about the potential scenario of a cool down because a lot of these coins were in the overbought zone. Their RSI was over 70. So this should be expected. Bitcoin already started to show, and it has been in a cool down phase, just consolidating. But if you look at XRP's chart, it is showing some significant pullback here. It's currently at $3.20, and you can see its RSI is exiting the overbought zone. Very healthy, very normal. The question is, how long will we be here? But at the end of the day, we have to be patient because the macro thesis is still in play of higher prices on the bull market continuing. The same thing can be seen on Ethereum's chart in the overbought zone and starting to exit that overbought zone. Normal, healthy, these things run in phases. The macro thesis of risk assets following global liquidity continues. Bitcoin is following it to a T. The stock market is hitting new highs. The dollar is in the dumps. All of the respective factors needed for the continuation are there. Plus, you have major narratives with huge adoption news, crypto legislation, and so forth. And speaking of narratives, Bo Hines, who I've had on the podcast, he works with David Sachs, part of the president's working group on digital assets. He tweeted out today that they have completed the 180-day report. It will be released publicly on July 30th. And he says America is now leading the way on digital asset policy. Very bullish. I am very curious as to what is in this report. I think they're going to highlight the amount of Bitcoin the US government currently has on its books as a whole from all the government agencies and other additional plans around crypto. Something to keep in mind, just recently, maybe about a week ago, we got a report that Donald Trump and the US government, they are set to open US retirement market to crypto investments. So we could hear some details around that. How are they planning to execute it? And in addition, are they going to start buying Bitcoin at some point? So I think this report is going to give us a lot of information, and I think it could be very bullish. I think it will, right? We see Donald Trump has been buying crypto, his kids and his family. Whether you like that or not is not the point. The point is adoption is happening on multiple fronts. So this could be spectacular. The timing of the release could align with the market finding its bottom and starting to move up again, right? So it would be a huge narrative. You know, mainstream media is going to run with it. Now, folks, if you are interested in setting up a 401k, an IRA, and just going that route with your crypto in your retirement account, well, you can get ahead of the curve by choosing iTrust Capital. iTrust Capital allows you to set up a self-directed IRA, and of course, there's huge tax benefits for that, right? And you can trade multiple cryptocurrencies, 80 plus cryptocurrencies. But they also have a very safe way to custody your crypto. They have what's called a premium custody account, and they use a bank to custody their crypto assets. So you can get ahead of the curve of what the US government is looking to do by setting up your IRA, rolling over your 401k, and get access to crypto in this way. And for the IRA, it's low cost and there's no monthly fee, and you can buy and sell 24/7. And the premium custody account, I believe, is right below self-custodying. So self-custodying is a great option, but also using an institution that has tier 1 custody, such as using a bank that's FDIC insured and so forth, is another safe way to custody your crypto assets. And folks, if you sign up using my link, which is itrustcapital.com/thinkingcrypto, you can get an exclusive $100 funding bonus. So check it out, folks. I have an account with iTrust. This is a great option, like I said, folks. So check it out, and you can be ahead of the curve with what the U.S. government is looking to do here. Now, let's move ahead. Ripple CEO Brad Garlinghouse highlighted the following around their stablecoin RLUSD. He said, in case you missed it, in the midst of all the regulatory goodness last Friday, Blue Chip, which is a independent stablecoin rating agency, ranked RLUSD as the #1 most trusted stablecoin in the market. Wow. That's pretty incredible if you think about it when you have Tether and Circle USDC out there in the market. So very, very big win here for Ripple and their respective stablecoin. And they got an initial rating of an A. So pretty amazing. Really, really big win here by the Ripple team. Now, folks, look at this news. Goldman Sachs BNY Mellon to offer tokenized money market funds for clients. All of the banks are getting into crypto. Just yesterday, we talked about JP Morgan looking to launch crypto lending and PNC Bank creating crypto trading using Coinbase's platform. And today we got news that Goldman Sachs and America's oldest bank, BNY Mellon, partnering to do tokenized money market funds, just like BlackRock. It's incredible. So Wall Street giants Goldman Sachs and BNY are preparing to offer institutional investors access to tokenized money market funds, which could unlock real-time settlement, 24/7 market access, and more efficiencies across capital markets. Clients of BNY, the world's largest custodian bank, will soon be able to invest in money market funds whose ownership is recorded directly on Goldman Sachs' private blockchain, according to the Wednesday news release. Here's a quote. As the financial system transitions towards a more digital real-time architecture, BNY is committed to enabling scalable and secure solutions that shape the future of finance, said their global head of liquidity, financing, and collateral at BNY Mellon. The initiative includes participation from industry heavyweights, including BlackRock, Fidelity Investments, and Federated Hermes, along with the asset management arms of Goldman and BNY Mellon, per the release. A couple things here, folks. Incredible. These banks see disruptions at their doorstep, so they are building with crypto technology. What's interesting, though, it's Goldman's private blockchain. What we've seen, many firms have went out there in the market with the private blockchain, but a lot of people don't trust it because it's very centralized. Now, if you do a closed loop thing with a partner that you guys trust each other, then it could work. But if you're looking for mass adoption across the market, like what BlackRock's doing by launching BUIDL, their tokenized fund, on Ethereum, Solana, and other blockchains, you're going to get more adoption that way, right? Public blockchains are the way to go. But clearly, these banks recognize this is the future. We need to build these products. We need to get it going because disruptions at our doorstep. So this is incredible news. And once again, it follows the news from JP Morgan as well as PNC Bank from yesterday. Now, MoonPay launches Solana staking as investor demand for on-chain yield grows. So we're seeing lots of products being launched, a lot of on and off ramps opening up now from different companies. So MoonPay, a fintech company specializing in crypto payments and Web3 infrastructure, has announced a new liquid staking program for Solana holders. The product will leverage liquid staking to earn users 8.49% annual yield on their SOL tokens. According to the company, users can stake as little as $1 in Solana and receive a liquid staking token called MP SOL. Rewards are distributed approximately every 2 days, and users can unstake at any time without a lockup period. The feature is available starting July 23rd everywhere except the U.S. state of New York and European Economic Area, EEA. MoonPay's MP SOL offering enters a competitive landscape dominated by Solana native liquid staking platforms, especially Marinade and Jito, each offering their liquid tokens with similar yields and flexible liquidity options. So it's incredible. We're seeing these companies build amazing financial products here. Now, obviously, you always got to do your research. I do trust MoonPay. They've been around for a long time. They're very transparent. You can readily identify their CEO and the team and so forth. So you want to make sure you go through the normal business checks, right? But MoonPay, they've been expanding and building and doing a lot of cool things. So great to see that this is an offering they are looking at. And I hold Solana in my portfolio. I do stake some. During the bear market, a great way you can earn while the prices are down is just by staking, having these proof of stake tokens. And obviously you could put in DeFi as well and just earn that passive income during the bear market where it's, nothing really is happening except downward price action. And that's a great way. We'll talk about prepping for the bear market as the bull market wraps up, folks. But this is great to see. Now look at this, another institutional investor building WisdomTree's USDW stablecoin to pay dividends on tokenized assets. So everybody's launching a stablecoin, everybody's looking to generate yield in some way. So global asset manager WisdomTree has entered the full stack stablecoin space following the passage of the US Genius Act, aiming to strengthen digital dollar infrastructure for its on-chain financial products. WisdomTree's US dollar-backed stablecoin USDW is a key component of its integrated strategy to serve both retail and institutional users, according to Will Peck, head of digital assets at WisdomTree. USDW is issued by WisdomTree Digital Trust Company, a New York chartered trust, to facilitate the movement of digital dollars for payments and to support the firm's tokenized investment products, most notably its U.S. money market fund, the Government Money Market Digital. Folks, I mean, look at what's happening. If you are feeling bearish, I don't know what you're looking at. You might be too caught up in your feelings and emotions instead of the facts of adoption and the charts and the on-chain data and the macros. So make sure you balance those emotions, folks, with the actual information and reality of what's happening. We are seeing incredible adoption here. This is amazing. Folks, that's the news. Let me know what you think. Leave your thoughts and comments below. Hit the thumbs up button. A great way you can support the podcast is by subscribing to my free email newsletter. It's 100% free. Also, check out my book on Amazon. It's available in paperback and digital, and my course at mycryptocourse.com. This is a comprehensive course that teaches you every aspect of crypto. All the links will be in the description. Check it out. Thank you guys for watching and listening. I appreciate you all, and I'll talk to you all later.